I feel good about it, Scott. Let me just start with, first off, thank you for having me on the last 3 days. It's obviously been an important period of time. On Monday, when the S&P 500 was down 4%, that felt like the washout capitulation, and that's why I made that call. Obviously, we're higher than that now. I don't think we go up in a straight line, but I don't think we go back to those lows. And the reason is simple. The economy is very strong, and what I point to on that is capital expenditures. It's Intel last week announcing the building of a $20 billion fab plant in Ohio. It's General Motors yesterday saying $7 billion plant for electric vehicle batteries in Michigan. On top of that, jobs are plentiful. You got infrastructure spending coming. What's been holding the market back, we know, is the Fed, and obviously today is pivotal. But as I've said over the last 2 days, and I'll just make it succinct here, I think the market is way ahead of where the Fed is in terms of becoming aggressively hawkish. Yes, the Fed is pivoting. The Fed should pivot. But the market has gotten carried away, and that's why I felt it was pretty easy to make that call on Monday when that washout happened.
We'll see if it holds.
Let's see what happens when the press conference comes.
Let's see.
Go ahead.
Let's see for sure. Pete, not to mention the fact we're down a lot, and we're down a lot this month, right?
Yep.
Dow's down 4.5% this month, yep. S&P 7.5%, and that's after we've had the kind of comebacks that we've had of late. The Nasdaq's down 11.5%. It was down a lot more than that. Nasdaq 100's down 11.5%. The Russell's down 9.5%. You've got the Innovation Fund over at ARK down 23%. I mean, there's a lot of stuff that's down a lot, Pete, which is why Jim Lebenthal said it was time to buy. We talked to Tom Lee yesterday, Pete, right here on the halftime report. He called in from some undisclosed location and said he'd be a buyer. Here's what Tom Lee said. Let's react on the other side.
We thought the first half would be tricky and that the highest probability of a 10% drawdown would take place in first half of 2022, but we're already here. So, I almost think now, we've priced in so much bad news that we're at the apex of that fear, and that means, for instance, the Fed meeting in March, it may end up being a big buying opportunity because we've already sold off so much.
All right, so says FundStrat's Tom Lee. He's been right, Pete. He's been right more than Tom Brady. Yeah. What about now, Pete? A former Buccaneer player, now Buccaneer fan.
Yeah.
Is he right? Is it a great buying opportunity?
I think there are great buying opportunities out there. I don't know if it's necessarily for the entire broad market, though, Scott. I still think there are plenty of different names out there that we all know that are triple-digit, quadruple-digit PEs still, even after these moves to the downside. And so because of that, I still think there are names out there that don't deserve to even be trading where they are right now. But that being said, one of the reasons why talking to you guys yesterday with the call-in, there were some opportunities, and I saw yesterday, a matter of fact, Citi as well as PayPal, I thought made more sense to jump back in. As a matter of fact, with PayPal, I was adding to a position that we had put on back in December and added to it again. It made sense to me because I like the levels. I like what they're doing. I like their crypto side of things and all of their acquisitions they've made. And then Citi, once again, I looked at that name. What drew my attention was obviously the unusual option activity. But I've been looking around at different financials. I think the financials still have room to the upside, but that doesn't mean everybody. I mean, a great example of that is even on a day like yesterday where Citi was relatively positive for most of the day, you look over at JP Morgan, some of the names that everybody seems to love, and there's pressure. And I think part of that pressure on some of those names has to do with, well, what about their valuation? If you look at that not on a PE basis, but you look at where they were trading in terms of a price to book multiple, some of the names are still pretty high. And that's why I think the pressure was on. So there are names out there, individual names, where I think you can dip your toe in there and take a shot. But that doesn't mean the entire market is a buy. I think there's still a lot of names, particularly in the NASDAQ side, that the multiples are still way too high.